most significant change we've seen in the industry is by far electronic trading. It has completely upended the industry. We've seen a complete shift of power away from the individual trader to the electronic trader to institutions. We've seen a shift of power within the exchanges, having gone private, to the exchanges gaining far more power and gaining all the revenue that was attributed to all the brokers and the clerks and the employees on the trading floor.
Well, I think unfortunately everything that we think about are the disasters. You know, going back to the crash of '87, you know, long-term capital, Amaranth, all the other things that you know, showed when Barings went under, all the impacts to the industry. And also when Jimmy Carter came in and put the embargo against Russia.
It was 40 years ago when, to me, the most important development actually took place, and that was the introduction by Leo Melamed of financial futures. Because we had futures markets in the commodity sector for a long, long time, but it was that introduction when Leo, working actually with Milton Friedman, developed the first financial futures contract, which of course are foreign currencies, and that led to the introduction of the T-bills.
Well, I was fortunate enough to be at Futures Magazine, and having just moved to Chicago in the early 80s, when what I think is the most significant thing happened, cash settlement. It opened up the doorway to all sorts of financial instruments that never could have been done on a physical settlement basis, and expanded the growth and potential for the industry and the business just enormously.
It's the embracing of futures options by individual investors. Now that all the e-commerce brokers have made that product available, we're seeing a lot of appetite for futures options, and we're seeing those markets, liquidity in those markets is not uniform. Some are really good, some are not as good, but in a lot of areas like interest rates, energy products, things like that, we're seeing a lot of traction coming from Main Street individual investors.
Of course, everybody can see the physical changes on the floors and how the powerful computers have taken over the execution of so much of the trades, allowing for deeply liquid markets and razor-thin margins and efficiencies for customers. The consolidation of the exchanges into big global forces, and in many ways also the consolidation of the FCM business. It's become more and more consolidated with a few major players with big balance sheets.
Well, I think a big part, of course, is electronic trading. It's made a lot of changes. What we're seeing now with electronic trading is we've lost a lot of the locals that kept that market closer together and made it not quite so volatile as it is today. But electronic trading, of course, has opened it up to the world.
I think some of the biggest changes over the last 40 years have clearly been the globalization of the markets. When I was trading bonds and bond options in Wall Street in the late 80s, I basically worked from 8 till 5, and all I cared about was the US bond market. Now I'm working, you know, God knows, 6 till 10, 6 a.m. to p.m. I'm looking at Asia, I'm looking at Europe, I'm looking at the US. But what's great now is you can see people trading markets from remote locations as though they were down the road.